Hey everyone, let's try to get this really quickly before the market opens. Hopefully we can get people on before market opens. Let's see. Okay, so real quick, it would be so ideal to get this opened above the zone. But at a minimum, I feel like if they open it around 7.8, 7.9, 8.3, those are still okay. But anything above 68.88 is going to be our best case scenario since we had a core close. Obviously, if they pin 69 or open 69, 21, 22, that's going to give us a big head start. But let's just see what they do. Anywhere around the 70s and 80s is still fine. I just don't want to open beneath 6.6. Okay, that's about what I expected. So 7-8 open. This can give us a pretty decent start to the week. A little bit better than what they did Friday. But that being said, since they didn't give like those bigger gaps like how they did the week before, that does mean that there could be a bit of back and forth this week, okay? So just really quickly, just from that type of open, this is still a good open. It's enough to give us at least a retest of the zone, a retest of 2-1, 3-2, and then maybe back to the channel. Sorry, my mouse froze a bit. Maybe back to the channel in here, but I do think that this area here could also still imply maybe coming back down and testing the channel again, since we did finally digest a little bit between 4.4 and 5.2. We still haven't quite digested between 3.8, this area here. So there still is a little bit of a gap in terms of like where we need to digest. I still think that they haven't quite digested this area as much. So that being said, I think we still have some tiny bit of risk back to like 68.20s, 68.30s, maybe between like 2.2 and 3.3, 3.8. So that'll be kind of like the downside in case they did give like a back test this week. We have a lot of catalysts happening this week too. I didn't really get a chance to fully finish the report yet, but I do know that we have, let me go back and see if I can copy paste this here. I don't know if this table is going to work in Discord, but we do have, let me see if you guys can see this. We have some mid-cap earnings. We do have bigger earnings later in the week. I think this is still updating some of it from last week, but we've got, let me go back here. Where is it? Hold on. And we've got NFP this week, and we still have some Fed speakers. So I feel like these things in itself could imply some volatility. Maybe later in the week though, like closer to like Wednesday, Friday. But that being said, the 3rd is a pretty big flip date. So we want to double check and see what our structures are looking like here, okay? So for starters, overnight, since we opened at 7.8, that was my minimum condition, was 7.8. I just haven't had a chance to put out the report yet. That's why I wanted to start the stream before market open. So 6.8, 7.8 is a good area to open. That being said, we want to see if they can retrace that 6.881 to 6.883 immediately, which could give us the test and the retest of 6.888, 68.90, and then we want to try reclaiming basically 68.99 to 69.0575. From there, I think that 69.17 overhead remains a wall, but would like to see 69.22 taken out overnight to reduce some volatility. And if they don't take it out overnight, that's fine. I feel like as long as they do it on November 3rd, we need core area on November 3rd, okay? So I would say that retracing 69.20s is crucial to mitigate risk for now through mid-quarter, because there's a lot of flips associated with this date. So let's just take a look quickly at some of the flips that we have coming up. So daily is pretty straightforward. We're stuck in an inside range. 2-day, we're stuck in an inside range. I can already tell that on like a 2.5, 3-day, this is potentially a flag, but maybe for like the later part of the week. 3 days flagging. even though it is stuck in an inside range. So maybe we get some more structural breaks like the second half of the week, kind of like what I was trying to get at. But most of these flipped on the 3rd. So daily, 2-day, 3-day, 4-day. Pretty sure the 4-day flips on the 5th. So this is kind of where we could maybe see that continuation. And the reason I like this is because the 3 days already flagging and runs through till the 6th. Are you guys paying attention? Whereas the 4-day flips on the 5th. So both time frames will include the November 5th trading date. Okay. So maybe we could look for some range on November 5th. Okay. In terms of that. So that's one thing we'll know in terms of structure. 5 days pretty straightforward. This flipped on the 3rd today and runs to the 10th. There isn't really any confinement or direction on the 5-day recently. I feel like it's a little bit more clean when you look at like 7-day plus. 6-day also was the 3rd. So you can see there's a lot of structural flips that flipped over today. And I do think that this flip day is very important so that we can try to determine the kind of range we'll get from now until mid-quarter. 8 days, one of the primary candles that we've been using, and there's some alignment there with November 11th, and you can even see that too on like the 6-day, between like the 11th, 10th, 12th. There's a lot of confluence in here on those dates, so it's just something that maybe we'll kind of keep in mind, and just in case they want to keep this sideways. So keeping it sideways, guys, is going to be, since they took it back to the previous channel and they could take it back to the previous zone, that means we could be in a battle now between 6788, okay, and 6832. This is if they keep it zone to zone, and then the upper zone between 6888 to 6932. That's one case scenario. If they decide to avoid the zone entirely, we could be channel bound, so between 6833 to 6849 and 6933 to 6949. In both case scenarios, you essentially wouldn't break the lower high. Does that make sense? This is how you'd keep it stuck inside. So stuck inside scenario, scenario would be not breaking both sides. So basically you would sustain above 6838, 6844, and you would stay beneath 6949, and you would not test 6953. Does that make sense? And we'll have a pretty good idea on that based on how they trade today's date, like the 3rd. I feel like if we achieve core ranges today, we have higher odds of not staying stuck in an inside range. Whereas if we don't, then, and let's say they stall neutral areas, like let's say they stall 6905, 6910, 6912. Does that make sense? I would say neutral ranges are more aligned with staying channel bound. Okay, so neutral areas are between 68.99 and 69.14. If we don't trigger anything higher than this area here on Monday, then we're probably going to stay stuck in the channel from now, maybe until like the 10th through 11th. And just back and forth. There could be just a lot of sideways action until some of these structures flip over for mid-quarter. So like this runs from the 11th through the 21st. So these are just some scenarios that we can watch for. Of course, if they hold core areas this week, let's say they open at 6878, they retrace 6920s, they break and get out of the means, and they test. So the only case scenario, are you guys listening, is if they hold core ranges. This is a core hold scenario. Pay attention closely. That means you cannot come back between like beneath 68, 66, 68, 71. Okay, you'd have to hold that, and you would have to take out 6920s. Okay, and you would have to basically clear. So clearing means you can't stall. You have to have a continuation up, and you'd have to come back and take out 69.53.75 gets taken out, and you'd have an odd of testing 69.66, 69.71, so on and so forth. That's a core to core week, okay? We do have that as a probability since we opened at 68.78, but with the conditions that have to be met, that we have to sustain overnight, we have to retrace. Do you get what I'm saying? So all of it's based on conditions that have to happen from now and tomorrow. Another scenario, these are the three scenarios we have this week. We don't really have any other scenarios. The third scenario would be if they, let's say, sustain the channel. Okay, so they don't break back beneath 68, 44, 68, 49, but they break core ranges. So let's say they break beneath 68, 68, 66 to the means. So 69, 68, 52, 68, 58, 68, 64. Okay. If we have a scenario like that, okay, that's going to imply volatility. This kind of scenario will imply volatility. This is the scenario we probably want to avoid. Okay. If they're not going to take us lower to digest 38, 41, 42 better, then I would rather avoid going back to 5258 because this scenario is what can imply a lot of whiplashing back and forth, okay? So if we have something like that occur, trust me, we'll know early on because we'll see how much range we can retrace. So far, based on this price action and like the fact that they're already retracing 8-8 guys, and this is one of our first conditions to start the week, okay? Remember how we just drew that? Like, they've already retraced. Like, they have already gotten back up to 8-8, right? So I would say that that's probably not a very high scenario, okay? If they're already taking out 8-8 in the first 5 to 10 minutes, I highly doubt that that's going to be the case, but obviously it's going to be all based on how much range we achieve. But the quicker we get to 69.20s, the higher the odds are of having a core-to-core week, okay? And I would say by quick, I mean like probably between this overnight session, like around London session, maybe in the first half of this session. Because if we have a means to means week where we break beneath here, like 6-6, and we come back to this area here, so that scenario would be like, okay, let's say they could still break 8-8, but maybe stall 9-9. That would be a bear zone stall. Okay, that case scenario, they could come back. Maybe they still hold here. Okay, the reason why this is a risky scenario is because we still have room for downside below. So the market was so sneaky last week. Like, they broke 5-2, 5-8, but they did not break 4-3 and 3-8. They intentionally left some room for downside. Does that make sense? They do that intentionally in case they want to save some of the risk for the week ahead, okay? And they'll keep delaying that risk just so that when it does occur, it could be maybe a very fast and sharp move down. Does that make sense? So there is still a chance. They could even take this all the way through here and maybe stall here and then come shooting straight back down, okay? A lot of it's going to be based on where they stall, but for now, this area still has some risk, okay, of revisiting just because it hasn't digested yet. So, and that usually has to occur, especially in a channel. It kind of is relative to where it's occurring. Like if they had gapped us and already had digested 3-8 and 4-8, then I would be like, oh, that doesn't matter. Like, they don't have to come back and revisit. But because it's a channel, the entire purpose of a channel is to digest price. So the fact that they've still avoided digesting 3-8 and 4-3 is a little bit concerning, but we'll have to see what happens throughout the week. This scenario could be like a means back test and then maybe retesting 5-3, expanding a little bit in the means, but not breaking this line, not breaking 6-6, not breaking 6-8, okay? And then that's what could cause that volatility back down, okay? And then we'd have to maybe see if we get a reset on the week. Maybe we get a better, maybe they might do this so that we don't pin 7-1, 7-8. Maybe they do it so we can pin in the zone, and then we have more zone odds for the week after. Do you get what I'm saying? A lot of it's just based on how much range they retrace and the kind of structures that we're working with. So since we have a lot of odds of breaking on November 3rd, I would say that I don't think that they'll keep us stuck sideways, but I do think we could see a lot of two-directional price action. Like, even because we have, like, between the 3rd and the 11th, it could be back and forth. Does that make sense? And especially because a lot of the bigger structures don't even flip until then. And they might do that just to keep it stuck until when? Why do you think they might do something like that? And I can't stream long, guys, because I do want to finish the report. So like you can see a lot of these are November 11th and they run through till the 17th. Why would they maybe want to do that, you guys? What do you think? Why would they want to maybe just keep it stuck until the 11th so that they can give range for like November 17th, 20, 24th, 18th? Why would they want to do something like that? 21st. This is one of the cycles that could work in our favor since it was that October 20th and runs through the 17th. So if we achieve enough range on November 3rd, this is probably one of the only time frames that could avoid us from staying stuck or sideways. Would be something like this if it's like a flag continuation, and this would be in alignment with that 4-day and the 3-day flags that we're working with. Okay, do you see this? Because they kind of have like the continuation odds. Same with that 6-day and this 8-day, because this kind of carries through, and this 4-day that flips from the 5th through the 11th through the 17th. So you could see like maybe some confluence between the 4-day and the 20-day. Okay, because this runs till the 17th. So it would be like a bypass between the 5th and the 11th. So a lot of it's just going to be based on the conditions we meet today, the amount of range we break on the 5th, because the 5th has odds for range based on some of these. Okay, so if that was the case, then I would say that the 5th has to be maybe that's the earliest point in time where they could come back to try retesting highs or like retesting the channel. Does that make sense? And then that's how we'll go from there to decipher whether or not they want to keep it stuck for a little bit longer. And then we do have some frames like the 22-day that are still in a continuation. This one engulfed and again runs till the 17th. So 1, 2, 3, 4, 5, 6, 7. This is a 7th bar on the 22-day. 7th bars are usually exhaustion or expansion period. So we can kind of take this one from there to see where they break. The 31, 32, 33-day are kind of the primary frames we've been working with. These also run till November 21st. And then the very odd occasion of this one going all the way through till month end, because we do have odds that they could just keep extending this. So why do you guys think that there's a probability that maybe they might want to delay just a tiny bit? Doesn't necessarily have to be the case scenario, but why would that be the case? Why would they maybe want to wait until November 11th, 12th, or until the 17th, 18th? Well, for starters, we've got CPI, I think, on the 13th or the 12th. What's another big reason? What do we have that usually occurs? So we have a lot of flips on the 17th and 24th, okay? There's a ton of them. What's in between those dates? So if the 24th is a multi-flip, okay, and what would be the final candle closing date on that time frame? You guys don't know? Come on. There's almost 50 of you guys listening. I'm sure one person knows. I've only got about like 5 more minutes left, guys, for the stream, so. If you guys could see how hard I'm rolling my eyes right now. One person at least try giving an answer. What would be the final trading date before the 21st? 24th. And it would make sense from a market perspective that that would be the case. Okay, if you guys don't want to participate, that's on you. This isn't a prep for me. This is a prep for you guys that I don't have to be doing on a Sunday. So if you guys don't care to answer, then that's up to you. Well, the answer is the 21st. Okay, that would be the final trading session before that candle closes and reopens, which is also our OPEX week. Okay, so there's obviously a lot of alignment with that. They might want to delay things until OPEX. I'm thinking that that's probably not the case. I feel like we could get some movement this week, at the very least getting back to like 69.22, 69.30s. Maybe extending and breaking that 5.3 range and getting maybe at least to 5.8 so that it can reduce the volatility just a tiny bit. Obviously getting to 6.8 or 7.1 would be the best case scenario, maybe even getting to like 7.8, 8.3, 8.8. I don't know if we have the highest odds on that just yet. We have to kind of see what range we achieve today, but that's what could keep us extended basically all the way through until the 10th. We've got CPI, I think, on the 13th. I don't remember the exact day. I think it's on the 13th. And then from there, we could see that extension all the way through. Okay? So maybe extend from the 11th through the 14th, through the 17th, through the 22nd, 24th. And then there's very, 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 very little odds that they keep direct extensions through December 1st and 3rd. But for now, there is still a little window that if all conditions are met through the month of November, they could just keep this going until that first week of December. That being said, it seems like we might slow down a little bit in December based on the structures that I'm seeing, but again, it's going to be based on whether or not, let's say they have like an 8-day flag, right? Like they could do 1, 2, 3, 4. So they might stall that 4th week, which runs from the 16th till the 29th. That could be its exhaustion week. That's also the date that the candle switches over. Okay, so this could be one scenario if we have, let me just draw this. If we did like 1, 2, 3, and then stalled, okay, for 4, and we can make these obviously green. This would be one scenario if they wanted to just ramp this up until end of year, okay? Based on a lot of these time frames though, there's some odds that they might stall from now until, or from December 16th through end of year, but obviously we're gonna have to see about that. But 1, 2, 3, 4, this would be like the maybe the, just gonna make this black, okay, because that does run. These are just some mock scenarios just in case. Okay, same with the 9-day. I think this one goes from the 19th till end of year, so you get the idea. It's kind of the same thing, but basically where maybe they keep us ramping, and then we could see that. So I'm already starting to prepare from now, guys, that the last 2 weeks of the year could be an exhaustion period, a slowdown period. Obviously, it's going to depend on how we act over the next 3 weeks, but use the 8 and 9 day from now until end of year. I think that these can really help you, especially because we have a lot of patterns that formed up like this. I'm also going to keep using this 13 day since this flips on the 18th, 8th, and then that 26th through end of year. And I also want to keep using this 14 day because this one already flagged up and is just opened again. And this runs from the 21st to 12th till end of year. So you can maybe use this as like some mid confluence in terms of that. And I think we said that 20 day was another period that could see some continuation. That's a 17th, 16th, 1st. This is a really, really good time frame because it basically highlights that 8 and 9 day, but on a wider break, right? So 17th, 16th, 2nd. So like this could be 1, 2, 3, 4. So this would be the only time frame. Actually, what would this be the only time frame of? Because I should stop being the one that answers all these freaking questions. What would this be the one time frame where we could actually have a different odd? What would this give us an odd of? Yes, this is our expansion scenario where the market keeps running until end of year. Okay, it doesn't stop. It just keeps going up. This would be a really good expansion scenario. So I would measure the 20 day manually. I would maybe see what the midpoints are between November 20th or October 20th and November 17th. So let's see, this would be 1, 2, 3, 4. And then this period here would run until February 2nd. So maybe see what this midpoint is, because whatever this midpoint is going to probably help us determine whether we'll exhaust or expand. And I think, so 20 bars, 28 days, so 10, 16. That is probably today. Yes, it is. Okay, November 3rd. That's exactly what I'm talking about. Today is going to help us determine, guys, whether or not the market wants to just keep going up from now until end of year. Okay, this is the 3rd is also a calculated flip for wider frames on 3-bar continuation and 3 bars with 4th bar occurring after end of year, so after post December 31st, okay? Okay, I'm just going to tag you guys in this one. You can 20 day, but still track 8, 9, and 3, 4. And okay, so even looking at this, I know for sure that today is also a calculated flip, because this is like when we had that nice gap and that break, and then we had that continuation, and this is, so market's probably breaking off like even like these mid intervals here, because this midpoint would be right around here. That would align with the second. That was also that secondary flip date that we had, I think, too, off some of these other time frames. I'm pretty sure some of these flipped over. That first week of December. December 4th we're going to watch. Okay. The second doesn't appear on many structures, guys, but it's a calculated flip. Okay. So maybe just write that down somewhere. This is a calculated day. It's not, there isn't many structures that flip on this day, but it is calculated, so I wonder if there's anything happening that day. Let me just double check that. Let's see. Does this help you guys at all? At least in terms of having, not expectations, but at least being prepared for like these sorts of scenarios to play out, because I feel like some people are just always ready for the worst case scenario. So we don't really have too much going on the second. We have NFP that week, but I don't really see much on the second. So maybe the second ends up being maybe some like geopolitical headline news. Okay, I don't know, but we're gonna be prepared for the second, okay? There isn't really many charts that flip over that day, but it's a calculated date. So we'll just write that down. The 2nd of December appears to be a calculated flip date with little to no macro events scheduled that day. So we'll be prepared for headline risk, okay? Okay, I have to finish the report, so I do have to sign off, but overnight conditions is pretty straightforward. I want to see if they can sustain core areas, ideally above 6668. Get back into the zone. They've already done that, so they've already broken back over 88. My first condition was opening at 78, so this was a very, very good open. And then try getting back over this 99. 99's not enough though to mitigate risk. We definitely have to get a break over this 95 and clear 17. We don't necessarily have to do this just yet. Even if they do this during London session, that's fine. Even if they take it and consolidate this yellow range here, that's okay. They spent too much time in this bear zone on Friday, so it would be okay. Do you guys notice how even though they took it to 17, do you notice how they didn't consolidate this area? Like it just went up and then down. So the goal for overnight for healthier price action, if they bring it back to 99 and take out 05 and take out 14, let's say, we want to at least try digesting this yellow box a little bit better this time, okay? It'll give us a better odd once we clear it that we won't come back to it, at least not for a while. So that'll be another condition, is to properly sustain the neutral area tonight. Okay, let me go back and finish the report. Who do we have reporting this week? I feel like I'm so behind. PLTR, I feel like the only direction PLTR ever goes is up. Yeah, AMD I know reports Tuesday. There's a lot of defensive names reporting this week, like consumer names, so maybe we'll keep an eye on some XLP, XLY names. Let me see who else is reporting. Kind of a mixture of sector, mostly mid-cap week, okay? Not too many mega caps or anything like that. We have Qualcomm I would watch. QCOM had a really, 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 really nice break. I would keep this one on watch. That'll be a high watch. Maybe watch TSM for sympathy, okay? I find those two sometimes tend to go together. I haven't looked at TSM's chart yet. Pfizer, I was still trading. I really like this chart. And they report on Tuesday before open. So Pfizer, keep this one on watch tomorrow, okay? I was already day trading this one last week. But keep that one on watch for tomorrow. Shopify, I haven't traded that in a while. Spotify, who else? Oh, MARA reports, I think, Tuesday. So maybe we'll keep an eye on some crypto. Crypto had a bit of a downside. I didn't check yet to see if they've recovered at all. I think crypto, Okay, Bitcoin's retesting 110,487, guys. This one needs back over 113. So maybe if crypto can get back over this range here, maybe we'll keep a very close eye on MARA too. This one needs back over that 1830 mark. So those could just be some trade ideas for the week. McDonald's, maybe watch Starbucks for sympathy on that one. I feel like those two usually go at the same time. This one's kind of been in a downturn. So has a lot of the restaurant type names have kind of been in a downturn. Wendy's, I think, reports later in the week. Wendy's, I know this looks like a really shitty chart, but I feel like this one could be a good one for long term because they're already hitting its fourth bar. Okay, so Wendy's would be one that I would maybe watch into 2026. This is just a longer term idea. Would be maybe when, because this should start hitting its exhaustion period as early as December 1st. Okay, so the period of exhaustion could actually occur a little bit earlier. Maybe earnings is what helps it start that exhaustion, and maybe the condition would be if it's going to exhaust into December, maybe you guys can just set these conditions or before December 1st. Maybe see if it can retract at least half its range on the 11-month chart. So maybe Wendy's has some odds of getting back to like $12 before end of year or something. And yeah, Snap has earnings too. I haven't looked at Snap in a while. Snap daily actually looks pretty good. You can't see this, but this is a cup and handle with that gap. This could be a nice one. I think that was it in terms of names that I think Conoco reports too, and I've been swinging XOM. I held some XOM into the weekend, so I know BP Energy reports too. I feel like some of these names could still move. Chevron had a really nice chart too for like some longer term. I think their dividend dates this week though, if I'm not mistaken. This one is I held because I just feel like it could have a relatively good move up, and my prediction was that crude could gap up for Sunday, which it did. Not as much as I thought it would, but we did get the crude gap, guys, that I mentioned on Friday. So crude oil did gap up a little bit. Crude gapped like we discussed Friday. Izzy still swinging XOM. Yeah, it did. Amazon, watch for a break back over this 244. I feel like our ranges on Amazon were really, really, really good. So we'll just watch for these exact spots. Apple, I actually forgot to look at into Friday's close. But I think, yeah, I held that 262. And it still broke 281. So some of these names could, I feel like maybe if ES holds up fairly well, some of these mega cap names could see some relief this week, especially since there's not as much pressure. The only one that I feel had a bit of a move back up on Friday was Netflix. And then Google stayed relatively flat after its earnings. Pfizer got a really good close on, that was my max range for Friday's session, was that 24.68. So I still really like this one pre-earnings. There could be maybe some sympathy names too to go with that one. I won't talk too much about banks, but I'm still swinging Bank of America just because this one's breaking off its annual range and it's on an 11-month flag, so this could easily continue all throughout the month of November. And it broke out of its inside range on Friday. This was when I day traded Friday, and I'm holding some November strikes for this one. And a lot of these are basing nicely after earnings, so maybe just, I feel like some of the financials could help bring the market back up. We need financials and oil to help bring the market back up. Try not to focus too much on tech. Maybe look at some of the other ones that could move the markets a little bit too. Plus, if I'm not mistaken, my thoughts are usually things move up into OPEC meetings, so I'm pretty sure the next scheduled meeting is November 11th or 12th. I don't remember, but there could be a crude ramp ahead of OPEC, which could help some alternative sectors. The only other thing that we haven't really discussed is gold. Gold stalled our exact measured spot at 4,382. These are huge intervals. So my thoughts on this are if this thing holds at least 25% of that range, then it has a relatively decent odd of coming back up and retracing. So 25% is usually a standard interval that I'd work with. So kind of like around here. I don't know if you guys can see that. Do you see this? But that means that there's going to be a lot of pressure for this one to get right back above here. Okay, so these are kind of the ranges. Anyone that trades gold in here. Gold saw a pretty steep dive. But if you are looking at this one, this is kind of the area that they need to sustain. Pretty close to 3,900, but it has to get back over 40.54. I haven't looked at dates yet on this one though. Well, the last we looked was that 13th. Maybe the way that we could do this is, since the 13th was the first date that cleared our calculated range, and then this date here was like about 9 bars. That's interesting too, because that was the last day that tested this area here. Do you guys see that? Maybe that's the range we can work with. So maybe no later than November 6th could be a variable for this one. On a shorter frame, maybe between here and the dates that we tagged installed highs, so like 6 to 7 bars. This would be the turnaround. So that's good that they turned around on that 7th bar. You can kind of see the correlation between here and here. That was the first day that they hit. So these are just some calculated points I'm thinking on. This is the term of maybe that's when it hit high, so this could be the day it hit lows as the logic. Okay, then some consolidation, and I would imagine that these would be the earliest days that it could come back and retest and clear that 75% of range. So gold has a lot of pressure, guys, for the 5th and 6th. And I think that's it. I think that's pretty much a full recap. I went a little bit over on time. So let me get this report out in the next 15-20 minutes, and then we'll touch base probably later this evening in terms of where ES is. ES is already testing 9.4, so that's really good. This is already getting to exactly where we needed to get to, especially on that opening break of 7.8. If you need to rewatch this stream, go ahead. I tried to start it a minute or two before the market opened, just so you guys knew what I was looking for, since I couldn't get that report out by 4 my time. And I will see you guys tomorrow. If you haven't done that verification process yet, guys, in the Discord, that's fine. It's just a way for me not to have to manually monitor Substack to Discord, because it's very tedious. So if you get a chance to do it, please do it off a PC. And make sure you're using the email address that you provided on Substack, not Discord. Okay? If you have any questions, just send me a DM or an email. And we can get it sorted out. If you haven't done anything yet, I don't think it's going to boot you out. It's just in the future, if you cancel it, it may, but, and even for free Substack subscribers too, it's just, I created a separate channel, then that way we can have maybe some more engagement and whatnot in there. Okay, good luck this week, and I will see you guys